Today's episode is all about doing things the right way in prop firm trading. I'm joined by Hola Prime and my guest today is Sam, Director of Growth from the Hola Prime team. We already know how prop firms operate and how they make money, so this conversation won't be about the basics. Instead, we will focus on what traders actually struggle with, following the rules 100%, getting funded, and staying funded, especially when trading with expert advisors and trading robots. Because I got banned from a couple of prop firms already, and I really want to know what I need to do in order to stay within the rules. We will talk about challenge conditions, risk limits, common mistakes, and what prop firms really look for when evaluating traders, both manual and algo traders. If you trade prop firms with EAs, this episode is for you. And if you want to support this channel so I can talk to more brokers, prop firms, EA developers, just subscribe. That's more than enough. And push that notification bell so you don't miss a future upload. Alright? Let's start. Sam, welcome to my channel. I'm glad you accepted the offer because we invited many prop firms in the past and they never showed up. So being on my podcast already means a lot, and I hope you'll be transparent to answer all my questions I've prepared for you today.
Absolutely. And Petko, thank you so much for inviting me. I'm a big fan, and I'm really excited. I've been very excited to do this podcast. So let's rock and roll.
Okay, for traders who may be new to Hola Prime, can you briefly explain how your evaluation process works?
Sure. So essentially at Hola Prime, we're trying to cater for pretty much every kind of trader there is. So of course we are a prop firm, but we deal with Forex, futures, as well as cryptos. And we're also a broker. So our broker is Hola Prime Markets. So in prop, we offer, leverage plans, lower leverage plans, as well as direct accounts. They're quite popular, as you can imagine. All of which, of course, designed to be quite transparent and realistic.
At the broker, was it established before the prop firm or afterwards?
After.
All right, so I assume when the prop firm was growing, you wanted to have your own broker to back up with liquidity and everything, so you're not dependent on another broker?
Absolutely. It's good to have everything in-house as well, we believe. And also, we had clients who enjoyed our prop side very much, and there was a lot of trust there, and we've had people, they've got great payouts, building up their capital, and naturally, prop should also be one stream of getting into a larger kind of cash account trading environment. So we had people pretty much request it as well if we ever get into the broker industry, and we considered it and we like it.
From your perspective, what does a good trader look like beyond just profits? But let's talk about the prop trading today, not the live trading.
I mean, a good trader, I know it sounds cliche and probably been said a million times, but it really does come down to, psychology more than anything else. Of course, strategy does matter. You can't just blindly enter. You have to have some kind of logic and strategy. But a good trader really executes that strategy well. Risk management, probably top tier. If you don't have risk management, it doesn't matter what strategy you have, how you trade, you're going to hit a wall at one point and you are going to most likely blow your account. So, a good trader essentially is someone who, I wouldn't say be like a robot necessarily. You got to have a bit of a human element to it, but you need to have good risk management, a lot of discipline. Don't let your emotions override logic when it comes to trading, and that develops consistency. And once you have consistency, even if you're able to make, just 1% a month, okay, it's not a huge target, but even if you can consistently do that, and your capital grows, the real money comes in getting larger amounts of capital to manage. That's where the money's at. It's not about trying to squeeze the biggest percentage out of what you have available. It's about gaining the capital so you can get safer percentages every month. And that's where the longevity of trading comes in.
I'm glad you actually said that, because we recently also tried to teach the idea of making just 2% a month, which is enough. And what you said about the risk and how you manage it and how you control your emotions is exactly what we discussed with another Rene Balke, a great YouTuber, talking about trading and algo trading. And he also concluded at the end of the day, it's not about the strategy, but how you manage it, how you control it, how much you're risking. Because you can have a great strategy, but you can still blow your account, or you can still lose the challenge quickly if you just put too high risk. But to focus on the challenges, and I've been talking about prop firms a lot in the past. We know how prop firms work. My audience knows exactly, the truth behind prop firms. So we don't need to discuss that. I want to talk more about the rules today and how we should trade the challenges so we don't fail and we don't break the rules, especially when we trade with EAs. But just to start here, when traders fail challenges, what are the most common rule violations you see?
Definitely, they break the drawdown rules or the daily loss limits. Essentially, they lose too much too quickly, or just lose too much overall. And it's not because they're bad traders. It's because they're trying to rush the process. If you have the mentality of quick money and large gains, get rich quick, that kind of mentality. Look, you might get lucky one time, you might get lucky for a week or 2 weeks, maybe a month, but it's always going to end. You're just going to be in a never-ending circle where you blow an account, you start again, and you blow account, you start again, and you never really get anywhere. And that's what I love what you said earlier about, the 2% rule, because it really is true. The most successful people on our platform are the people who target 3% max, because even if you have, hypothetically, let's just say a magic strategy that's 95% correct win rate. As far as I'm aware, it doesn't exist, but let's say it does exist for a moment. There's still a mathematical probability that you are going to have a 5, 6, 7 losing streak. And if you hit that losing streak and you're over leveraging, you're putting too much risk per trade, that's your account gone, even at the greatest win rate you can imagine. So you have to really, lock in that risk and just small gains, bit by bit, grow consistently. And therefore, if you have a 5 trade losing streak, you're still okay. You haven't blown your account. You can still manage it. You can still recover from it. It's not the end of the world. And that's how you survive long term in trading, whether it's prop or cash account with a broker. Either one, same rules apply.
I'm very glad you've made that clearer, because there is this assumption or expectation when people start trading prop firms that they will pass just quickly with a couple of trades. And I remember myself when I was watching the first videos on YouTube, because I'm a YouTube guy, I'm a trader who is YouTubing just like you. I saw the first videos where everything that was ranking on the top of YouTube was I passed the challenge with 1 trade, I passed the challenge with 2 trades, and so many of those YouTubers, I don't want to mention any names, of course, but people just expect to make quick money with prop firms. And I was the same. I did the same mistake at the beginning. Honestly, I was risking too much. And then I understood that we should handle it as a live account where we target low 1 to 2% a month, because obviously with the drawdown, which is very limiting, and especially when we trade with EAs, it's very hard to stay within this low drawdown, and the only way we can do that is by taking very low risk. We evaluated with the team that we can realistically pass challenges with EAs between 6 and 8 months, sometimes even a year, which at the beginning wasn't possible because there was this 30-day period where you had to pass. Now, I don't know if Hola Prime that had in the past. I remember.
No, we never had it.
It was a stupid rule that was just forcing people to trade aggressively and risky. And I think it will take time, but time will come when people will realize that, okay, to pass prop firms, we need to go slow and to be patient.
Yeah, I agree. I mean, I think there's a big consensus out there, and I can understand it from a trader's perspective that you want to pass quickly, you want to get to the funded stage quickly. I totally get that. And I guess, if part of your strategy is to, if you're happy, going through 5-6 challenges in order to get that to the funded stage, and you're happy to just kind of, all right, it's not that big of a fee. If you're happy to do that, then fair play to you. But then you treat the funded, once you're funded, you treat that really, you lower that risk. If you do it that way, I wouldn't recommend it. I wouldn't say that's the right way to do it. But if that's your strategy, fair enough. We can't stop you, obviously, because I get it. Like, people don't want to wait 2-3 months, in a challenge phase, working essentially, trading every day and knowing that this is just an evaluation. But if you go back to the old school prop days, that your 3 months would have been lightning quick. Most people were, a year, basically, on a trading floor, learning, trading every day in simulated before they even got near live capital. So we're very blessed in this day and age when it comes to prop firms. Unfortunately, the convenience of it and like you said with YouTube, what gets views, what garners views is the speed, the kind of, I passed it in one trade, I passed it in 2 days, whatever it might be. That sets up a bit of an unrealistic expectation.
Absolutely. I don't say they didn't pass in 1 or 2 trades, right? But probably they just bought 10 challenges and they open 10 random trades, 1 passes, and they record a video and they, recover all of the fees they paid. But a solution here for those that are anticipated and they want to pass like every month. And I shared that initially with my team, because when I initially realized that and I shared with my team, a few of them were like, okay, but we'll have to wait 6-8 months before we, pass the first challenge. And I said, you know what, we can buy 1 challenge every month, and then in 6, 7, 8 months, if we pass consistently every month, you will get a challenge passed, rather than just buying 7, 8 now and blowing them rapidly because of the high risk. All right, let me ask you the next question I have prepared for you. Which rules do traders underestimate the most? Like the drawdown is the obvious, and I was expecting you say, that's the one that people breach the most, but which one they underestimate and it happens like, I didn't figure out that this will happen.
Not such a rule, but size. How much size they're putting in the market. Because, say you have, I'm just going to pull out a random figure here, but say on your account you have a, $3,000 drawdown, right? Allowed. They underestimate the market conditions that they're currently in. And I've seen this happen so many times. They'll be trading, let's say, post NY Open, and the market's a bit more calm. It's not moving as much. And, they might enter 1 contract. I'm talking futures here, but the same applies with the CFDs, right? They'll enter 1 contract, like 1 E-mini, and, they're looking at their drawdown and saying, it's not too bad. It's only $100, for a few candles. I can handle that. And then NY opens, and all of a sudden 1 E-mini is way too big, and now they get stopped out. They've lost now, $700. Okay. Now they've got, $2,300 left in the tank, essentially. Now what they do then is double up to try and make that back quicker. And before you know it, it's all gone. And it's the wrong way to approach it, because you should really be looking at your drawdown as kind of like fuel in a tank. If you're running out of fuel in a car and, the petrol station is X amount of miles away, putting your foot down and driving faster is actually making the problem worse. You want to slow down and really conserve your fuel, so you reach the target. And trading is no different. And people really underestimate the, they double up when they're wrong, to try and make back the losses quicker, but that just exacerbates the original problem. They might get lucky occasionally and it does work out, but generally speaking, it's the wrong approach.
I'm actually happy to speak with you as a trader and you share your experience, because just before the podcast started, you shared with me that you have trading experience, because I was expecting, a Hola Prime employee, because I've been working for brokers a lot. I switched many companies before I started YouTubing and trading myself. And most people that work for brokers and prop firms, they don't know anything about trading. So I'm very happy we're having this trader to trader conversation today. And what you just said makes perfect sense as well when it comes to trading with expert advisors, because once we have a drop and we lose something, like let's say if the max drawdown is 10%, when we lose 5 or 6 or 7, then is the time where you should lower the risk twice or even 3 times and just say, okay, this will take maybe a year to recover, or it could take 2 years to pass. And then of course once it recovers a little bit, you can increase the risk again, but not to double and try to revenge the market, because then you're increasing the chances of blowing the account, which obviously is a mistake. So I think the same rules apply to manual and algo trading. It's the same thing. Yeah. It's just the instruments is different.
Exactly. And it always comes down to emotional control. It's when you have, every trader's going to come across a bad day. It happens. And when you are in a bad day, whatever the reason for it, you have to walk away. If you can accept the loss and the losing day, your chances of becoming a good, successful, consistent trader grow, tenfold. I've seen traders who do so well. They're making really good gains, really consistently, doing, pulling numbers that are really, to be admired, and they lose it all because of one day. They just couldn't walk away. They had to finish green on every single day. And it's you're so close, but you're so far away. Do you know what I mean?
Yeah, I know what I mean.
Yeah.
And tell me, what gives the traders the best chance to pass? Or to put it another way, if a trader follows just one principle perfectly according to your experience, which one gives them the best chance to pass the challenge?
I mean, there's many. I would say the best one is probably, limit the risk per trade. I think what's important is, again, because look, controlling emotions is difficult for most people, right? Most people, we're human beings at the end of the day. We are emotionally driven. And if you've lost an amount you're not comfortable with, that emotion is going to come out. But if you have a lower risk per trade and you lose, we're talking 0.1% or something, that's not going to hurt you emotionally, because it doesn't feel that bad. It's like, okay, I can handle that. That's okay. You don't really have that much of an emotional attachment to the amount. The moment you start panicking, you're risking too much. The moment you can start feeling that emotion coming into your trades and bleeding over into the charts, you're risking too much. So you have to lower it down, I don't think there's a single professional trader out there that I know that would consistently risk more than even, 1% is probably the maximum, I would say, per trade. Even that's pushing it, especially in prop, that's pushing it as well. But yeah.
That was my next question, actually. I had what is the max risk per trade? We were pushing it to 1%, to be honest, when most prop firms had 10 to 5. Max drawdown, but now when it's 6 to 3, having 3% daily drawdown and you risk 1% per trade is just risky, because if you just lose one trade, you've already lost 30% for what you can risk for the rest of the day, right?
Exactly.
So we lowered it to 0.5 now, 0.5% with the EAs, which gives you, a little bit more space to breathe. So you've already answered that. And let's talk a little bit more about the risk management, because I think that's really important, and that's what makes trading, and not just prop trading, but trading different from gambling, right? So many traders focus only on hitting the profit target. That's the goal, right? And when you start, you always think about hitting the profit target. But how dangerous is that mindset when you just forget the drawdown?
Very dangerous. Very, very dangerous. Look, you can't make the market do what you want it to do. You can only react to what's happening. For example, if you have a breakout strategy, right, and it really only works in a trending market, and you're on a range day, they happen. There are many days where it just ranges up and down, doesn't really go anywhere. You're going to get chopped up in that market if you're trading, your strategy, and vice versa. If you have a range bound strategy and on a trending market, you're going to get chopped up. So, you might be expecting, okay, I'm expecting a nice extension here and that will hit my target, but that extension won't happen on that day. So you can't force the market to do something that it doesn't want to do, essentially. You can only react. So you have to be super, I always like to say, before entering any trade, ask yourself, are we ranging or are we trending? Once you can figure just that out, are we in a range-bound market or a trending market? Then, you know what to target and what to expect. If you're in a range-bound market, you don't really want to be targeting above the range as your take profit. You kind of want to, be near the top of the range if you're buying, obviously. Now, if you only, going back to your question, if you focus only on the profit goal, it kind of clouds your judgment. Rather, what you should be doing is forget the P&L for now. Work on percentages, forget the P&L, and just take what the market gives you. If a great trade comes along and it does extend and it's, and you keep trailing it, let it ride. You might hit your profit target. But if it's not that day, if that doesn't happen, don't try and force it to happen by, constantly entering, trying to, take every potential opportunity. Take what the market can give you. If today's not your day, come back the next day. Tomorrow might be better. And that is probably the best way to do it, in my opinion.
Yeah, and before I get to the key section where we will be looking at the rules for the expert advisors, can we conclude that slower and steadier trading actually makes it more likely to get funded?
Oh, 1,000,000%. Yeah. 1,000,000%. No, there's no question about that. Yeah.
All right. How does Hola Prime view algorithmic traders compared to manual traders? Do you guys separate them? Like, do you have like A, B book? One is the algo, the other one is manual trading, or?
We do allow, so for our Forex product, there is no difference. Whether you trade manually or with an expert advisor, the rules are exactly the same. What matters more is, how your system manages the trades. So EAs, of course, they're allowed, but they still have to follow the rules. The rules such as max drawdown, all that stuff. So if you can code an EA that fits well within, the parameters of the overall challenge rules and once you're funded, absolutely fine. We don't really place you guys in, EA guys here, manual traders here. Follow the rules and you're good to go, essentially.
Yeah, okay, all right. That's exactly what I wanted to hear, because sometimes I think prop firms take the algorithmic traders on the side, and it's like no matter what you do, if you use EA, at the end of the day, you'll get banned or restricted. Because I've got banned from a few of the prop firms.
Yeah.
I don't want to discuss, I've said that in many of my videos, I shared it transparently. In some, I was breaching the rules without realizing it. With others, just because I'm YouTubing and I share the EAs that I'm using, obviously hundreds of people also use them, and the prop firms didn't like that.
I would just add, obviously, if you're using like an EA that you coded yourself and it's your own, that's definitely 100% all good. Right, but if you're using like an EA that's publicly available and you're just copying trades from thousands of other people, there might be slight issues with that. And then it will really come down. You're allowed to use them, but you have to, again, customize the settings to fit our rules. Because off the shelf sometimes doesn't really, fit directly with most prop firms and their rules. So you have to be very careful.
Can you share why that's a problem? That's something I cannot explain for myself. I know it's a rule for all prop firms nowadays, but why it's a problem? Because when we trade live accounts, we can trade same EAs as with the others. Yeah. And probably you can explain that in a simple words to me, because you have a broker and you have a prop firm. So on the broker, I guess it's not a problem to trade the same EA, but then on the prop firm, it's a problem.
It's about managing risk, right? So say, for example, there's 1,000 traders all taking identical trades, okay? And they're all in the funded stage. And, our system will copy certain trades from certain traders depending on performance, and we allocate, how much capital to copy on each, whichever trader's funded, right? But say now there's 1,000 of them, and something goes wrong. I don't know, something goes wrong with the EA, or maybe, there's a glitch, or it gets something really wrong. You've just exacerbated a bad trade 1,000 times. Do you see what I mean? So having, too many people copy the exact same system is actually dangerous for any trading floor or any trading firm, because you're essentially exacerbating a problem that, if it works well, great, but it comes down to risk again. So that's probably the main reason. But again, I don't really work for the risk management team, but that's, from my understanding, one of the main reasons.
I hear you what you say, and it kind of makes sense to me. We also had a podcast with head of trading of one of the biggest brokers, and he explained that when one EA, Waka Waka, we were promoting a lot before, not just promoting, it's not our EA, we were just profitable with it. So we've showed it many times in the videos, and obviously many people started using it. That's the reason I got banned from FTMO, just because many people started using the same EA. But he also said the thing, even they are so huge, if the EA starts going in one direction, it's just millions of dollars in orders are being executed in this one direction. It actually could cost liquidity providers, and it could affect actually the market price even of Aussie CAD, I believe he said. So they're keeping some of the trades with them just not to affect this badly, and to offer the stable conditions. And when now you say it this way, probably it's also related that if many people are using one EA, let's say a gold robot, and it just buys this week, but one of a sudden the market drops and price goes in the opposite direction, then it's gonna be losses for the traders and eventually for the prop firm.
Because it can be very dangerous. You just mentioned gold. I think it wasn't yesterday, the day before. We had Trump announce that the EU tariffs no longer are going to go ahead, and gold took a sudden drop, and that was completely out of the blue. No one can kind of defend themselves against that. Obviously, you'll have a stop, but there is that danger. Sometimes the market can just react to something, but a influential figure out there says, and so you have to have that kind of that risk management has to be ingrained, and we need to spread our risk in a way that we don't get caught out on sudden moves. And the liquidity provider thing that you mentioned as well, that also is, I can see how that can, that absolutely makes sense as well. Yeah.
Can you share transparently, are you placing all the trades from the challenges into the broker, or just the funded? Is the challenges like a demo environment, and then the funded account is with the broker?
Challenge is absolutely demo. So nothing from the challenge account goes into any live market whatsoever. That's purely to test your skills. And then once you're funded, even then, we don't automatically just start, because you get, people who get to the funded stage via luck. It's not that difficult to get to the funded stage, right? Like you said, you can buy 10 accounts, hedge, multiple positions, and one of them will probably end up funded. So we can't just, that data alone isn't enough to put a lot of capital on the risk and start copy trading. But we really do gather data from everyone who's funded. We basically, and this is more the risk team does it, but from my understanding, we gather, all their data of how they trade, their consistency, so many different metrics come into play. And then it's like, you place bets on who's, say, for example, you have for the last 6 months been consistently doing 2% a month. We'll be very interested in you, right? Because you're very consistent. You've proven it over a decent period of time. We will probably allocate on the back end, when we copy your trades, more capital to your trades than someone who is kind of, they might do 5%, they might do 6%, but then they don't really do anything, and they're kind of up and down, and it's all a bit kind of, you can't really predict their future as well, or their, P&L over a longer period of time. So we'll allocate a bit less to those, to that person. So, the way we work on the back end then is we manage our risk depending on who our funded traders are, what their performance is, and essentially, and that's essentially how it works,
And because that's everything you say is very interesting to me, because I really want to understand how it works from the back end. And I know you said you're not from the risk management. I get it why. What's your point of view why using the same EA is not allowed? But how do you track if people are using the same expert advisors? Do you see like a flow of the same orders? Is the system, it detects if same trades are being opened?
If 250 trades are opened exactly the same, same price, same time, that's going to flag a little bit what's going on here. Either, it might not be an EA, but it might be one of these groups where people are just, copy trading each other. And that's, again, we don't want just one big group of people who all just copy some other person. We want actual real traders. We want people who can consistently make money, not just someone who just copies someone else. And
I got you. I guess you. The thing is, at the past, when we figure out the problem in the first place, when I show any robot in my video and many people start using it, was trying to change magic numbers, trying to change comments. But if the trades remain the same, this becomes useless, because even the prop firm sees the magic number or the comment or the EA is different, but the trades are the same. They will still see that this flow of 200-300 trades placed at the same time is happening, probably because of EA usage. So what you've mentioned, like randomizing the parameters, probably would be more effective. But because the thing is, many people want to trade prop firms, but they don't have trading skills. They cannot trade manually. They cannot call EAs. Like, that's the massive people, and they prefer to buy the expert advisor. Now, some expert advisors, they offer in the inputs randomization, so you can randomize and make the strategy different, but then others don't, which means you can't really use such an expert advisor in a prop firm. And I'll be just opening the rules you have on your website. If we can have a quick look at it, will be great, because I had a few questions. And what we actually concluded with my team at the end of last year is that we shouldn't really struggle to modify and twist market EAs rather than build our own using strategy builders like EA Studio or the prop app we have, where the trades are unique, the strategies are unique. And we were looking at the rules again, and actually the most important to understand what are the prohibited trading practices, right? So hyperactivity is obviously a clear one. Account or device sharing. If a trader shares their Hola Prime account or the device on which they are using Hola Prime, resulting in sharing the Hola Prime account or selling it, it will be considered a direct breach. Is that when people are offering to manage someone's account and you give your account to somebody?
Yes, and also, there are, for example, certain regions in the world where we can't legally provide our services, and people try to get around it by, they'll sign up under someone else's name, and then they'll send the account to them, and that could lead us into problems, So essentially, that's why KYC exists. You have to, if you're signing up to Hola Prime or any prop firm or any broker even, you're the person who should be trading that, there has to be a zero tolerance policy to that,
Okay, and the next one, which says gambling and speculative trading. Placing multiple buy and sell orders at different price level to exploit short-term price movements. I get that, but does this eliminate the grid martingale systems? Because the grid martingale systems, the EAs, they open multiple orders. As you know, it could be in both directions, it could be in one direction, it could be hedging. Does that mean the grid martingale systems are not tolerated here?
I think martingale as a whole is you know, it's a dangerous system, right? Because you're essentially, we're going back to the whole risk management, right? You're doubling.
Yes, it does. You know, I mean, the people that are, my question here was more of the people that are actually aware of what it is and they want to take this risk. Should they take the risk, or even if, you know, if it goes slickly in their direction, the prop firms still want to tolerate that?
I mean, look, it depends on how, I guess there's a bit of, there's going to be a bit of logic to it. You know, if you're essentially, okay, say you take a losing trade and you apply a bit of martingale by it doubling up a little bit and you do it once in a while, you know, nothing's going to happen. You're not going to get flagged. That's fine. But if you're, like you said, you're hedging up and down, you're trying to, you know, where it just becomes pure gambling essentially, because you're just placing bets on any direction you can just to try and, you know, hopefully it goes more in your favor and you keep doubling up. We've seen it happen. I don't think anyone has ever really survived long term using a strategy like that. It's just gambling essentially. So, you know, and again, we don't want people gambling. We want people with actual consistency. That's the most important thing.
Okay, so the next one probably answers a little bit more: excessive use of margin and high risk on trades. Professional traders do not risk expose 0.75 to 1% per trade, which aligns with what you said, and keep margin usage within the 30% range. Can you make that a little bit clearer?
Essentially, don't full port your account. You know, there's a big trend recently going about where people just full port. They add full exposure, full risk on one single trade, and yeah, again, you know, it's look, you might get lucky, it might work out, but it's not a long-term strategy. We don't want people. Essentially, the whole point of a challenge is to prove that you can trade somewhat consistently. Now, if you're doing it purely out of luck and you're just full porting, you know, you might as well just flip a coin. Buy two challenges, flip a coin. Heads, you go long. Tails, you go short. You know, but it doesn't prove anything.
I get you, yeah. And is that only on the risk side? Like, if people want to pass with one trade, if they watch these YouTubers who are passing challenges with one trade, can they pass with one trade, or they cannot lose more than 1%?
Yeah, no, you wouldn't be able to pass with one trade. There is a level of consistency. I mean, we do have a consistency rule, at least on the futures as well.
I was going to ask about it. Can you explain the consistency rule to the beginner traders, please? Because we receive this question all the time, and I'm not sure if I explain it the best possible way.
It's very simple. So say, for example, your profit goal is, we're just going to say $5,000. Make it really easy, right?
Okay.
Actually, make it 10,000, makes it even easier. If you hit that goal on one trade, okay, that means, you've just full ported and just, took a gamble essentially, right? Which, okay, technically you've passed, but you haven't shown any consistency, right? That could have been luck, right? So the consistency rule comes in to essentially your total profit, so of that 10,000, right? No single trade should be more than what the consistency percentage is. So if it's let's say 30%, your single biggest trade shouldn't be more than $3,000 then. Does that make sense? Of that whole 10,000. Now, what that does essentially is forces the trader to show a level of discipline, risk management, and consistency. Okay, hence why it's called the consistency score. Now, that might sound like a lot of people don't like them, and I understand why they don't like them, because it prevents you from what we just mentioned earlier of just kind of, full porting and getting lucky. But essentially, if you're a trader like that, believe me when I say this, in the long term, it's not going to work out if that's your strategy. You might get a lucky month, you might get a lucky trade, you might get a lucky week, but long term, you're not going to be a consistent, profitable trader, which, doesn't help. And we need consistent people. The business model only works with consistency.
To put it in a simple way, if you are trading manually, and I think that's more about manual trading, you cannot take today you trade 0.1 lot and 0.1 lot, and tomorrow you trade 2 lots, and then that will break the consistency, right? You need to keep trading with similar, or at least increase it, but not too much.
You can change the lot size. That's not an issue. It's more about the end result of the trade, right? So,
it's the profit or the loss.
That's correct. So the profit shouldn't exceed the percentage of the overall gain. So if your target is $10,000 to pass the challenge, like I said, it's just a random number. It's just because 10 is easy to calculate with. If the target is $10,000 and the consistency score is, give me any percentage right now, say it's 20%, your biggest single trade win shouldn't be more than $2,000 then. That's essentially all it is.
All right.
You can change the lot size, depending, because that's completely allowed, of course. Like if you're seeing, because many traders have, they categorize their setups in A tier, B tier, C tier, whatever, and they might risk a small amount on C tier, a bit more on B tier, and if they see an A+ setup, they'll add a bit more size. Absolutely fine. Of course, that's a legitimate way of risking, spreading your risk. That's completely allowed. That's got nothing to do with the consistency score. Yeah.
Okay, all right. And the consistency score is defined by the prop firm or by the trading that the trader performs?
Prop firm. Yeah, prop firm. So essentially, one single trade cannot be more than 40% of your total profit. Now, that doesn't mean you'll fail the challenge. If it is, it just means you need to make a little bit more to get that under 40%. So say, for example, your total profit goal is 10,000, you hit 10,000, great. But one trade was $5,000, so 50%. You now need to make a little bit more. I can't do the math on the top of my head to get that. So 5% becomes 40% of the total profit. Does that make sense?
Yeah, I got you. Yeah. I think it's clear now what you just said.
Yeah.
That example was a good one. Let's scroll a little bit lower and look at the section of using expert advisors and algorithms, because that's what our audience is most interested in. So traders are permitted to use expert advisors, algorithms, and indicators. However, it is essential to customize their settings, which you already explained, so the trading activity will remain distinct from that of other traders. Our risk and compliance team may, at its discretion, request traders to share source code of the EAs, which actually confirms what we concluded with my team, that at just no point, it's a waste of time to try to squeeze third-party EAs, and we should use the ones from EA Studio, the prop app, where we can download the robot. So if the team requests the source code, we can provide it. And now the following is, if 2 or more traders are found using identical or near identical EA configurations, the following actions may be taken at our discretion: denial of a Hola Prime account approval, rebalancing of existing Hola Prime accounts, termination. Can you make it a little bit clear when the prop firms decide to terminate your account and when they just put a flag or they deny the certain account, but they don't ban your account? Because this is when I was really frustrated with FTMO, was because they just terminated my account without even a warning. They could have said, hey Petko, you showed on your YouTube videos this EA, many people are using it now, so make sure to tell them or to tell your subscribers that this is forbidden, and don't do it if you want to keep the account with us. Or just say, okay, we'll keep your funded accounts, but we will delete all of the profits you've made in the last 1 month, and you can start with another EA. But they just terminated the account, which is, in my opinion, ridiculous, right?
No, I totally get it. Like we've had similar cases as well, but we we're very much, and we've done many interviews as well with other traders who've ran into some issue. I'm not saying EA necessarily, but ran into some issue. They accidentally traded news, was one guy, for example, and it was a genuine mistake. His overall trading was excellent. We were very kind of pleased with him, and he made a little mistake. So it's fine, don't worry. We just scratched it off. Obviously, naturally, you get a lot of it's automated. So once it gets flagged, you might get an email or something. But we very much like to work with the person because we genuinely do want decent traders, right? So if you're, for example, actually really good, and we like your performance, but you may have breached technically a rule and stuff. We can work together here. Do you know what I mean? We can talk to you. We can, all right, how can we resolve this without just, straight away terminating or anything like that? So we like to work with our traders and see if we can come to some kind of compromise. So if you ever run into any issues with us, talk to us. That's always, open dialogue is the best.
What's the best way for the traders to approach if they're not sure if they're because it happened quite many times where people are writing to us, hey, I'm using this expert advisors, but then I saw their rules. Am I breaking the rule? And then what we would say is that, okay, just write to their support and ask before you do it, because after you do it, there might be consequences and you cannot,
If you're unsure, if you have an EA and you're unsure if it will be allowed, shoot us a message. Our support team are, I have to say this, they're incredible. These guys work so hard, and it's open 24 hours, 7 days a week. Doesn't matter where in the world you are, and we reply. It's not some AI bot, it's real human beings, and we reply quick. So we've got a really good support desk. Talk to us. We'll answer your questions very quickly, and we'll give you, an answer. Whether the EA will be allowed or not. It's a very difficult to have really black and white rules when it comes to things like that, because there are certain, EAs, if you coded it yourself and yeah, absolutely, you're fine. We don't want to say no EAs allowed, but at the same time, if you're just buying some EA off the shelf from some random website, and it's like some Euro scalper bot or something, that's just kind of, let's be honest, it doesn't really work. It's a bit old, and you can probably buy it on some forum for, $20. That's not really what we want either. Do you see what I mean? So it's kind of...
Yeah, I get where you're going, yeah. And I don't want to go through all of the rules now because there are many. I don't want to make it too long and boring here. So I will leave it an open door for our subscribers to drop any questions below the video. So if you don't mind, just to check the comments in the next days. And if they have any questions about the rules, they can drop a comment, or as you said, they can talk to the customer support. And going to the next question I have here, have you noticed, or what are the biggest mistakes EA traders make when attempting prop firm challenges? What have you noticed from the backend, like why EA traders fail?
Exactly the same as manual traders. They put the risk parameters just a bit too high. It's no different. I mean, an EA doesn't, I think a lot of people think an EA is quite magical, especially if they have, little trading experience. But an EA is really only as good as the kind of, how you define the risk. If you're asking the EA to put 3% risk on each trade, it's not going to work, It's exact same as manual. You have to manage it correctly. It's the whole idea that you can just download a program, set and forget, and never ever have to look at it, never have to, tweak the settings, just sort of instantly starts printing money. Hey, I wish that was true. But even with an EA, there has to be some level of management. And EAs are proven to work. I mean, every big central bank, hedge funds, they're all using algos now. Quantitative trading is the new thing. And especially with AI moving forward, who knows where the space is going to be in 5-10 years, right? But there's still human beings managing it. It has to be constant supervision, constant tweaking, constant management. And that's your job then, as someone who uses an EA.
Yeah. We always keep an eye on them, and we always usually recently we actually lower the risk, try to even lower the risk, even if it's making what we are expecting. And then if we say 5 or 10% a month, we say, okay, do we need that? We don't need that. Let's reduce it to 3 to 2%, just to make sure. But the thing here, what's really challenging for me and my team, and I guess for most of our listeners, is that we have some good EAs that we are trading live, and we want to implement that on prop firms, but we can't because of many people using the same EA. And then there is the randomization that came as a solution some time ago with many of the vendors. Probably I have a huge role here that I showed. When people using the same EA, you get terminated. I'm pretty sure my videos influenced a lot of that as well with the prop firms to put these rules. But then comes the thing that if you randomize it, then you're changing the strategy, so you can actually turn a profitable strategy into a losing strategy because you randomized it too much, right? And then the only solution I see is to build a strategy yourself. If you're a programmer, you can do that. If you're not, then you can use strategy builders like ES Studio FSB, Strategic One. There are many where people can code their own EAs. And can we comfortably say that if the strategy is unique and it's automated and it's within the rules, within the consistency, it should work fine without problems?
100%. Yeah. If you have a strategy, if the way you trade is, and you've got a lot of good data, and because this is a common thing as well among traders, right? They have a strategy, they have their parameters set out. They're the weak link in making it work because their emotions come into play. They just don't execute the strategy as they should be. Backtesting proves, this has got a good edge. But when you go into the live market and you're trading, forward testing, you're not, holding your trades, you're exiting, you're jumping in at the wrong time. You're basically the bad part of the whole strategy. Now, if you can code that into an EA, that takes away the emotion, and instead an EA does the execution for you, and you still manage it and tweak the risk, and over as you get more data, you can kind of see, right, okay, my max drawdown was 5%. I want to kind of lower that a bit, and you tweak it, and you kind of absolutely, that's spot on. We'd love that. That's incredible, because if you can do that and prove consistency with that, 1,000,000%, that's incredible.
Okay, all right. So passing a challenge is one thing, but staying funded is another. What separates traders who keep their funded accounts from those who lose them? Like, what's the key piece of advice you can give to the people who pass and want to stay funded for longer?
Longevity. Look at the long term. Treat it as a business. This is ultimately it. If you risk a little bit more on the challenge just to kind of speed up the process, I get it. Like, I'm not going to say, oh, you shouldn't be doing that. I totally get it. I know why people do it. But once you're funded, once you have actually achieved the funding, please lower your risk. Please just look at it. You don't ever want to lose that account. Why would you ever want to lose it? Just, you only want to be gaining more capital. You never want to put that account anywhere near its max risk parameters. You want to always be comfortable.
And from the back end, do you see how much, I'm sure you have these traders that are being funded for long enough. Have you noticed some kind of a pattern, like how much they risk per trade to stay long-term funded? What's the reasonable risk per trade for the funded account once you get funded?
I can't give you an average percentage, but it will be below 1%. Definitely below 1% per risk. I don't want to mention names, but there's one client that pops in my head who I interviewed, and he's incredible. But and when you talk to him, you can just see this guy gets it. He understands it. He's not in any rush. He's not looking to get a Lamborghini next month. He's just, he has a day job as well, which is I think is super important. If you have some other form of income, you're not, anything you make from trading is just extra, and you don't feel that rush where I need to make this money now. I need to, because that's going to kill your account. And this guy just is probably one of the most consistent traders I've ever seen. He is an EA, I would say. He's just so robotic in his approach. And, I really admire the way he trades, because it's not even, some crazy, overcomplicated system. Very simple as well. Really simple strategy. I think he uses a few moving averages and a few little things, but nothing, that's never been done before. Very simple stuff, but he executes it so well. And that is why he is so good. And yeah, he has a losing day. And yeah, but it doesn't faze him. He comes back the next day, he just executes it the same. He has strict risk rules in place. He never risks too much. And every month, he's been with us for almost a year, I would say. And he always gets payouts. He's just killing it.
What's the longest funded trader you had in the platform? Like, what's the...
I honestly don't know.
You don't know? It's just interesting to know how long traders can stay funded.
For about a year and a half, we opened up shop essentially. The people behind Hola Prime, we were a trading floor before that, closed capital. So we got the people behind Hola Prime. We weren't trading for many years before that, but as a prop firm, Hola Prime, that's been about a year and a half. I actually don't know the longest, but the guy I just mentioned, I'm pretty sure he's been, since he's been funded, he's never blown an account. And he's still trucking on. He is like the most consistent guy ever. And that is gold. When you find someone like that, we as a firm, will treat you so well. And the reality is, it's not because he's an incredible, strategist or something. All he does is he has fixed rules, right? He risks very small per trade. He only takes, when the setup is there and when it's truly there. When you're taking a trade you shouldn't be taking. He only takes it once it's all his confluences line up. He doesn't rush the process. And he has, if he has a bad trade, he walks away. That's literally it. And you will be amazed by his results. I think he's done well over 100,000 in payouts. And every month he's taking a good, 8,000, 9,000. The guy's just so consistent.
I think it will be great if you write to him, if he wants to be in my podcast. It will be great to share some more of his experience and how he strictly follows the rules. And have you noticed recently people using more or less expert advisors in prop trading? Is that becoming more popular, or actually people, because I know with live trading it becomes more popular, but with prop firms I'm not sure, because then people got skeptical if they cannot use market EAs.
I'll be honest, I don't have the data whether EAs have increased in our client base, but I think you're right though. I think it is becoming more popular, especially with the boom of AI. And I think it's only going to become more popular. I think the reality is, as traders, we need to evolve. The markets evolve. The majority of liquidity that gets put into the market and volume that is being traded is done by some form of EA, Algo, whatever you want to call it, some kind of robot, essentially. It is the future, and it will just, and what these EAs do once as the volume is getting, because I remember when I started trading, 15 years ago, the markets were calmer. They were a lot more calmer. Now they're getting more noise in the market. The overall structures still kind of apply, but there's a bit more noise, there's a bit more movement, just in the second chart even. And that's a lot of, just because there's a lot more volume in the market now. There's a lot more algorithms. You've got HFT, high frequency trading. You've got all these algos managing, passive orders in the books. There's so many different algorithms playing, and it's only going to get more with AI. So I think absolutely it's the future, essentially.
the Mr. President Donald Trump, who can influence so much the market. And before that was Musk all the time influencing the crypto. We can say that the market is also very influential, which wasn't really the case before. As they like to say, the good old days was just the central banks and increasing the rates from here and there. And we were expecting, I was trading a lot the news when I was manual trader, to be honest. But as you said, recently is too much noise coming from the big institutions, the algos they use, the millions they trade, and of course the figures like presidents, and I think they are the biggest influencers nowadays, not the YouTubers. Okay, I want to hear your thoughts of what's the future of prop firm trading. Are there any developments coming up that traders should be aware of? Or do you think that's it? Like, it's nothing really it's already improved as much as possible?
I think, the prop space is very interesting. You have, sadly, a lot of bad actors in the prop space as well. Because, truth be told, anyone can open up a prop firm. There are white label solutions out there that anyone from their bedroom can open up a prop firm. Now, the problem with that is there's no capital backing that. So the only way that prop firm's making money is hoping you fail. So you get these bad actors in the market, which clouds the kind of... Because look, the prop space is a time proven, it's existed before online prop firms, and I think it will always exist. The idea that you get good traders who trade larger capital and you put more capital to the better ones, allocate a bit less capital to ones who are, decent but still kind of getting there, and you spread your bets essentially as someone who controls the mass majority of capital. That system works. Every institution essentially is built around that system, right? So I think the prop industry is only going to keep growing in the future. But if you're getting into it, you have to be aware that if you're seeing some firm come out and they say, oh, you can buy a challenge for $10, have a red flag. If they're giving away, 100K account for $10, $15, that should be a bit of a red flag, because it doesn't make sense, right?
We recently actually saw $1 challenge. One of my team members told me.
The sad thing is people fall, and I don't get it. It's tempting. It sounds good on paper, but if it's too good to be true, it usually is, right? And then, they get payout denials, whatever, because they're never intending to pay you in the first place. And then that kind of stains the prop industry. It tarnishes the prop industry, and people have that skepticism, which is good to have natural skepticism, but
I have a lot of skepticism about the prop firming in general.
Yeah.
I hope I didn't sound skeptical during the podcast, but just because I suffered a lot from prop firms, and as you said, there are bad players, and I personally believe that every prop firm makes money when people fail a challenge. But on the same side, if you think about it, the forex brokers, if they have this A and B book, if people lose on the B book, they still get the money, right? So it's the same thing, just shown and displayed and structured in a different way. And I'm very transparent in my videos and calls, and even with my team, when I always mention the being banned from this or this prop firm, and usually I have Sam from the team as well, same name. He said, yeah, but Petko, you broke the rule by using this NDCA, right? And I said, yeah, you're true. I'm just getting annoyed because they didn't let me know anything. They just terminated my account, right? But to be fair, I'm not skeptical about Hola Prime. I'm not positive. I'm just somewhere in the middle now because I still haven't got a funded account. I'm trading a couple of challenges. I will try to follow the rules as much as possible, and we will review definitely the outcome in the next videos. And I hope we can have a future podcast with you because you're very transparent, and I like your trading experience where you also promote the idea of trading low risk, to stay longer on the market and not the fast money thing that, you know, this idea on YouTube to get rich quickly, which is ridiculous. Yeah. But unfortunately, those are the YouTubers that have the million subscribers and over because they are selling just this idea. So hopefully if I succeed to get funded with any of my own EAs, to see how that will go in the long term, I'll be happy to invite you for another podcast, and then we can see how it will go from there. And I really thank you for joining today. I saw that you have your own YouTube channel. I'll make sure to drop a link down below for all the manual traders that are watching. Even I assume there are not many because we are primarily doing algorithmic trading. But for me personally, it was nice to see and hear a little bit more for the first time how prop firms work from the back end. So I thank you very much for joining.
And thank you for inviting me. It's been a really good chat, and I definitely am 100% up for you know, doing this again. It'll be great. I think, you know, I can talk about this stuff for hours and hours. Trading is a real passion, and I love everything about it, and I just love talking about trading, especially with someone who gets it as well and is a trader and understands it. It really does brighten my day. So thank you again, Petko.
Okay, thank you. All the best to you, Sam. Have a great day. Cheers.
Bye-bye. Cheers.